Hello, everybody. Happy Wednesday. I hope you're all doing great this evening. My name is Jason Krutsky, and I will be your host for this very special masterclass show where we'll be digging into day trading strategies and intraday setups with our good friend, Bracco. Bracco, my man, how are you doing this evening?
I'm doing good. Thank you guys for having me on. I'm super excited to do this and pretty much just reach out to all my followers. We're going to be going over my favorite day trading setups. I posted a thread a while ago covering most of these, and I gotten a lot of further questions on those. So this is going to be a good way to kind of dive into detail on my strategy and how I execute those.
Awesome, man. Well, we're super excited to get into it. But before we do, for anybody who's tuned in who is not familiar with you and your style and all that sort of stuff, could you give us a little bit of history, how you got into trading and all that sort of stuff?
Yeah, so I got into trading in August of 2020, just about 2 years ago. I got into it from my roommate that I lived with when I played hockey up in Boston. He had taught me he learned options over the summer. He kind of taught me how, calls and puts worked. I didn't start trading common stock. I started right off with options. And yeah, ever since, I've just been going for a while. I kind of quit trading and I just worked on technical analysis for like 3 or 4 months. I didn't take any trades. This is when I was working full time. I would hop on the charts at night, draw out some ideas. If we break here, I'm going to go long and here's my target, and come back the next day after work and see how they played out. I did that for a while. So I guess, that's how I really got accelerated in the technical analysis aspect of trading. So yeah, that's pretty much it.
Awesome, man. Well, again, like I said, we're so happy to have you on. Before we get started here, for anybody who's watching, we are offering for just the hour that we're live, we're offering a 45% discount. This is only good for 1 hour. So if you're interested in being a TrendSpider user, you want to take advantage of that deal, hit us up in the YouTube chat. We will be happy to hook you up with the code. And then also for folks who have questions for Bracco, we are going to take a few questions at the very, very end here. So hold those questions. We've got a couple already lined up. And if we have a little bit of time for more, you guys can you guys can put those in the YouTube chat as well. So with that said, I'm going to pass the baton over to you, Bracco, man. Hit us with what you got for us.
All right, so we're going to start off with just a basic outline of my strategy and how I like to trade. As most of you know that I've said on my Twitter, I'm a day trader. I plan on getting to swing trading more in the future, but for now, this is just what's helping me learn how to execute trades. I'm all cash every night in my main account, 100% cash. It's just what's comfortable with me. I find that if I take swings in my main account and say they're down in the morning, I kind of get more emotional. My day trades feel like I'm trying to grind back those losses. It can influence me a good bit. So I'm 100% cash every night. Basically, it all starts from the watch list the night before. I think that's the most important aspect of it. A lot of pretty much almost all these trade ideas stem from the daily chart and daily chart setups. You see on my Twitter, I mostly post daily charts, and that's what I like to use to kind of, get an idea for these trade ideas. And then I'll pretty much stick with 3 names that I watch the next day. I've been sticking with, names that I'm really familiar with lately. I actually heard a great quote that said, in a bear market, you don't need many stocks, right? You need a little bit of familiarity, some range, and that's pretty much it. So I've been sticking with the few stocks I know the most, which are like Tesla, Apple, and then the third one will usually be a nice setup. I find it varies between a couple of them through like this daily traders list I have, like Snow lately, Netflix, PDD has been one. You see this up on the screen right now. This has been one of my favorite traders lately. So I'll essentially come in with 3 setups. I'll have a plan to the long side, a plan to the short side. I don't really like predicting where the market's going to go the next day. I don't really care if we go up or down. I just need range, but I'm prepped for both scenarios. And then, so TSDR, my mentor, I want to give him a shout out. He essentially taught me everything you're going to see here. He's the reason I'm here where I'm at today. But he had told me that for your trades, get your idea from the daily chart, find the trend on the hourly, so the higher highs or the higher lows or the lower lows and the lower highs, and then execute your trade on the 2-minute or the 5-minute. So making sure that time frame alignment is there and it's all working in your favor. As far as max loss goes, my max loss is usually around 2% of my account. If I lose 2%, that's where I'll cut it for the day. And that is like a hard stop no matter what. As far as max profits go, I don't really have a max profit where I stop. I have a goal that I like to hit, and if I hit that goal, if I hit that goal early on, I'm obviously trading really well. So I say, why not use that to my advantage and really push it on this day? It's better to push it on the days that you're trading well, rather than push it on the days where you're down trying to, make money back and revenge trading. If you never push it past your daily goal, you're never going to really get ahead on your journey, right? So if I hit my max goal, or what I'll do is I'll say, okay, you can keep trading, but as soon as you get one loss, you're out. Okay, it's kind of like I treat my days like my trades. So if you have a winner, you're not just going to sell at 30% every time. You're going to trail your stop and let that winner go because it's working in your favor. Same idea for my days. If I'm trading good, I'm going to kind of trail my stop on the day. Best case scenario, I double or triple my daily goal. Worst case scenario, I lose one and then that's a day and I fall just short of my goal. So that's how I go about max profit and max loss. As far as trades go, I'll go with usually 5% of my account in a trade. I go a little heavier at the open because I think if you can catch the move, if you can catch the right direction, I think the risk reward is incredible, and that's where you want to be sized. I size down midday and towards the end of the day, but in the mornings is usually we'll have that max size. And then yeah, so I like to execute usually one or two solid trades at the open. Lately, it's been one good trade. And then throughout the middle of the day between 11 and 1 o'clock, I'll kind of sit back and analyze, watch the market. It's very slow. I don't think many trades should be taken at that time of day. And then if there's any good setups into the close, I'll maybe take one or two going into the close if we really start heating up like we did today.
Gotcha. Real quick, couple questions. First of all, how do you go about picking like a watch list? I know you said you're only looking at a couple of names. And then the other question is, what do you use for your trail stop?
Okay, so as far as the watch list goes, I pretty much just have this master watch list of stocks that I've traded since I started trading. All stocks that I think are liquid. I know their levels well. And it's usually, I've narrowed it down to about 100 stocks now, and I'll just kind of scroll through those every night. I'll go through all of them, and I've gotten pretty good at seeing those daily charts and recognizing a good setup and a bad setup. And then, yeah, I go from there. But as far as trailing stops go, um, I like to use the EMAs to guide my trade. I'll usually use those as stops. I don't really like to use I trade options. Obviously, I don't like to use option limit prices that much for stops. I like to make sure it invalidates, based off the technicals, in case, because sometimes your stop can get hit, but the idea could still be valid.
Right on. Got it. Makes sense. So I guess talk us through this first setup.
Okay, so well, I'll first say that I'm going to go over 8 different trading setups. I have about 8 to 10, but I'm going to keep it with 8. We're going to go over 2 different setups for gap ups and gap downs, how to trade those. We're going to go over 2 different setups for the VWAP, which is one of my favorite indicators, and then 2 breakdown and breakout setups. So we're going
Awesome,
to start
man.
with the gap trades. So for example, this is actually a trade I took on PDD. This was on October 4th. So this was yesterday. This was a really awesome trade. I was really happy with this one. So the idea was on the daily chart. We had a nice tight consolidation. We were just closed right at the 9 and 20 EMAs. I'll first say that the indicators I like to use intraday are the 9 EMA, which is the green line, the 20 EMA is the purple, and then the blue line is the VWAP. Okay.
Okay.
Some people use the 8 and the 21 or the 8 and the 20. It's all relatively the same. It's just whatever you're most comfortable with. Try them out, see what you like. But yeah, so I had an idea on the daily chart. I said, hey, if PDD, can crack 63 tomorrow, we might be able to see some fireworks. The daily chart looked good. The hourly looked good. And then, so as you can see, the 63 level, it's right around here. And then we gapped up. Now on a gap up, when these things, rip straight off the open, you don't want to chase those, right? That's how you get trapped. You want to wait and let setups form. And so the first ones we're going to be going over is a gap up and a 9 EMA pullback. So this is a long side example of that. So we gapped up on PDD. At the open, I like to use the 2-minute charts. Later on, after the first 20, 30 minutes, I'll switch or maybe 15 minutes, I'll switch to the 5-minute chart, but I like to watch the 2-minute at the open. It's what I've gotten comfortable with for these trades. So we can see, I kind of like to let the first 1 or 2 candles work out a little bit. You'll see later, I'll show an example of an opening range break to the long side. In this case, this did not opening range break because we had this upper wick right here up to 6506, and then we didn't quite get there again, and we kind of pulled back a little bit. So now that we pulled back, I'm going to see if we come back and if we see buyers at the EMAs, and if they're going to hold this thing up and maybe form a little bit of a rounded bottom and push higher. So I had this 6506, which was the previous high of day right at the open marked out. And then I noticed, we didn't quite tap the EMA, but the buyers were there. You can see the bullish hammer candle right there. And I actually took my entry on a thrust through this VWAP here. On this 5-minute candle, I'll kind of circle it here. My entry was right there on, I took the 66 calls. And obviously, I was anticipating that hard bounce off the EMA and thrust. I figured buyers were taking control. We're getting through the VWAP, maybe come and break the 65 level. We didn't. We pulled back here. I said, okay, I'm going to see if they hold this 9 EMA again. That's getting a little tighter. And then we ended up holding the 9 EMA right here. If we would have broke down through it, down here in between the EMAs, I most likely would have stopped out of it. But we held it, pushed higher, and then got that thrust for the VWAP and came up and broke high a day, and then continued, consolidated, stayed above the 20 EMA, and then moved all the way higher to high a day. These went like 120%. This is a PDD is incredible trader. I highly recommend you put it on your list, especially when it has an inside day. It tends to have really nice setups in the morning. You'll see my next example is also on PDD, but that's going to be the gap up and the 9 EMA pullback. So when you see it fail to push at the open, the pushes you don't want to chase. You want to wait for a setup. We didn't get the opening range break, which I'll go over on the next slide, but we got that pullback to the EMA, was strong. You could take it over this high day at 65 where we really saw the volume come in here. You see the volume coming on the 65 break, but I like to get that little anticipatory entry and anticipate that break a little bit. So, maybe my risk or my win rate is going to be a little smaller, but my risk reward is increased. Okay. So the next one we're going to go over is the ORB long. So this is another trade I took on PDD. I had I thought it looked really good on the daily chart, on the hourly. I said, hey, let's look at this thing for a setup at the open. It gapped up, obviously, very similar look to the last one, right? Where we had that push up. It was actually, it's pretty funny. The 63 spot was my trigger again on this one. So this is that 63 spot coming into play again. So we kind of had this candle that couldn't break over that high day, right? Similar to the last one we saw here where we had that second push, but didn't quite get there. But instead this time buyers stepped in quick and thrusted right above that 63 level. I take my entry right on that 63 break. That is an opening range break. So these are very hard, a lot harder trades to execute. I'm getting a little better at them. I highly recommend if you're going to try trading opening range breaks to even just start with one contract and kind of work on your entries a little bit. And one thing that TSDR taught me that kind of helped me really navigate my way through these opening range breaks was that to think of it from a psychological perspective. So, say, we had a little sell-off into close the previous day. Maybe we had some traders get short into close, and then we come and we have this opening tight range here. When buyers take control, you got shorts covering here, which can help accelerate to the upside, and you got breakout buyers. Okay, so this opening range break, your win rate might be a little smaller, but if you can catch this opening range break, especially if it's going to be a trend day, you're going to catch a massive move on some of these. And you'll see the next one, opening range break to the short side I show, you'll see that in an example. But yeah, so if I take this over this 63 spot, ideally, if this were to wick out and fake out and come back and break that candle low that I took the entry on, that's likely where I would stop out on this trade.
Got it. Could you talk us through real quick? Actually, I guess two questions. First question is 2-minute opening range. Is this what's customary for you? You're just calling the first 2-minute candle as your opening range and you're playing based off of that. Are you ever looking at other time frames, or is it always a 2-minute?
Yeah. So I like to watch the 2-minute in case it's like a quick one, because lately they have been pretty quick at the open. But if you see it, kind of you get like 4 or 5 candles that haven't broke anywhere yet. That's where you can kind of switch to the 5-minute and block out a little bit of that noise that's unnecessary. Because if you get to the smaller time frame, sometimes, you get a little bit noise that you really don't need.
Got it. And then can we go back to the first chart? I just want to clarify how you're stopping out here. You stopping out on the first candle that closes below that 9 EMA in this case?
So So for this one, by the time we pushed up here, we were already up pretty solid. We had the EMA still moving higher, and I was
Right.
kind of watching the 20 EMA on the 2 minute. So if I take my trade on the 2 minute, I'm going to continue to watch and execute the trade on the 2 minute. Okay, if I take
Got
it on the 5 minute, I'll keep watching on the 5 minute. But this 20 EMA on the 2 minute, I wanted to see how we react there. Maybe I would have given this a little bit room to the VWAP to see if we get this bounce off the VWAP because it is above, our entry was all the way down here at, I got in around 64.70, I believe. And then this VWAP up here is around 65.30. So we're still up pretty solid on it. So I'd like to probably see how that VWAP acted, but luckily, I did take some scales on this second candle push here. I scaled some out, and then
okay.
I scaled some on this wick up here as we got up here. And then so essentially, we already locked in some profits and took some risk off the table. So our cost basis is lowered a little bit, so we can give this a little more room to pull back and work. It's really early in the day. This setup could continue higher, which it did, and we were able to scale out up here near high of day.
What if it had gone against you immediately, where you have that second hammer into the 9 EMA? What if that had closed lower?
If this had closed below the 9 EMA, I would have
Yep.
gotten out on this. That's taking
Okay.
too long. You don't want it to take that long. You want to see these buyers buying this up quick off the EMA, showing that they really want it. And watch
Right.
the volume too when these start to break these key spots. This volume was a huge teller. I knew as soon as I saw this volume count, I was like, we got this thing. Like it's gonna be a good one.
Yep. Got it. Okay, cool. Thanks.
Okay, so this next one, and also I want to say that I have 8 setups in here. I didn't want to overcrowd it, but essentially the same idea works to the short side. So you get a gap down. You don't want to chase that downside momentum right away at the open. You want to wait for a setup to form. So what you'd see is a bounce into the 9 EMA off a gap down. And then if you see some weakness in sellers into that 9 EMA, that's where you can kind of play this same idea out, just like pretty much the opposite. I didn't want to have too many examples to go over here, but there's a few in here that essentially you'll just trade. It's like the same idea, but in the opposite direction. On a gap down, you have traders who were long at into the close the day before, and then if they see rejection of those EMAs, they're trying to get out quick, and you just see that downside accelerate.
Got it.
So Tesla here, we just went over the opening range break long on PDD. This is going to be the ORB short. This was one I had on Tesla. I unfortunately sold way too early on this one, but this is a perfect example of a 2-minute ORB. So I like to let the first 2-minute candle play out. Always, this came from the daily chart. We had a breakdown of the daily chart. So the time frames were in our favor. I like to mark the high and the low of the first 2-minute candle. I find that Tesla really likes to break on like the third or fourth candle of the opening range when it sets. It likes to break quick. And this thing has been an incredible trader. This thing's ATR is like $15. It's been this thing has so much range intraday and provides so many incredible opportunities. This has been probably my favorite trader for the last 2 weeks. But as you can see, we had the first 2-minute candle kind of just, consolidate here. We had a 283.65 high of day, 282.20 low of day here. We had the VWAP right in the middle, okay, just bouncing back and forth. This candle tried to push higher a little bit, but got stuffed back down. And then just look at the power of that candle. I'm taking that immediately on the break of 282.20 right away. We know that the markets, the markets gap down. Tesla's breaking down on the daily. Like we have to take advantage of this. And like I said, sometimes these ORBs will shoot back on you and it won't work out. But for example, on a day like this, if you look at Tesla, you take your entry on this thrust through 282.20, and you'll see it too. You'll notice how hard it breaks through that opening range bottom. And then if you take, for example, if you were to even enter at the bottom of this candle, if you even got in late, you got a 3.7 move, 3.7% move to the downside without even touching the 90 EMA in the 2-minute. That is like trending. And that's
Yeah.
why I say like you can win like 3 out of 10 of these, and this one trade will make up for all of those losses.
Yep.
So essentially on this ORB short, I entered right on this break. You scale, obviously, I like to always scale into strength or into weakness, right? You don't want to be scaling out when this candle's popping back against you. You want to sell into the hard pushes down because your contracts will get crushed a little bit on those little tiny pullbacks. So I take this on the opening range breakdown, and realistically, I should have had my stop over this 9 EMA on the 2-minute, which is right around here. I had stopped out here. I had gotten a little nervous. I was up a lot. I wanted to protect that. But if I'm clear headed, I really should have let this go. And then, I probably would have stopped out somewhere around here on this candle when it kind of consolidated the 90 MA. But that is the ORB to the short side. This is one strategy that I've been working on trying to really master. I've been trading it a lot more the last 2 weeks, and I really want to just become like an opening trader specifically. I want to trade the open. I think that's where the best opportunity is. There's volume, there's range, and I just think lately in this market, the best opportunities have come in the first 30 minutes to an hour. So that's where I want to make most of my money. And then, if there's any setups later in the day, I have that flexibility to work with that. So that's the opening range break to the short side.
Cool. Quick question for you. What if that after that third candle, the one you took your entry on, what if it had reversed instantly and just clocked higher? How do
So
you plan your exit there?
yeah, so when you want the ORB to be quick, you want it to be fast. When this breaks, you want it to just knife down and keep going, right? So as soon as you see this thing like maybe come down and start like grinding back up or wicking back up, you almost like kind of want to get out as quick as possible because it's going against you. You want the move to
Right.
happen quick. And because this has maybe a lower win rate when you first start, you don't want to be holding through big pushes higher. You want to get out quick. You can always get back in, right?
Right.
So usually if I enter on this candle, if it breaks that candle high again, I'm out. I'm
Okay.
out like immediately. So like, you can always get back in. There's no reason to hold and hope for this to come down. Don't have a bias, right? The trade's going against you, right? You were wrong. It's okay. You can be wrong, right?
Right.
So just wait. But yeah, so I would essentially stop out there.
Okay.
Um,
Cool.
yeah. So this was another trade I took on the same day that I took this PDD trade. This was Rivian. So this one wasn't ideally really off of a daily chart. This was more off a catalyst. So I believe they might have had delivery numbers the other day. I think Rivian shot up like 7 or 8% after hours. And we had our watch list session. I was like, hey guys, listen, we might be able to keep this one on the list tomorrow. It had a catalyst. Rivian's known to like kind of really get a lot of chasers and FOMO on these moves. It's just one of those stocks. And I said, if this thing doesn't really do anything at the open, we might have some range to work with. So let's keep an eye on this for setups. Um, I had taken PDD at the open, so I wasn't looking at Rivian yet. But I came into it and saw it around 9:45, I think. I had saw it. I scrolled through my watches to see how things were moving, and I said, "Hey, this is interesting, right? We had the fail pop at the open and a knife back down, and we kind of consolidated sideways really tight." I watched this on the 5 minute, but I want to show it on the 2 minute chart just to show the power of this VWAP. So we kind of had this level here at 33.80 that I noticed that they kept buying it up at, right? They bought it up here, they bought it up these 3 times, and we kept wicking below the 90 MA and getting bought up. And every time we came up to this VWAP, it would get hard sells. So this thing was getting super tight. And I was like, hey guys, this is a perfect, candidate for a VWAP sizzle. And a VWAP sizzle is basically, a bullish trending stock that consolidates tight under the VWAP. The EMAs get nice and close and tight to the price, and that thrust through the VWAP is where you'll see a real trend change. Now, I like to think of the VWAP as like the line in the sand, right? I think of the trading day as like a war between bulls and bears, right? And under the VWAP, the bears are in control, and then over the VWAP, the bulls are in control, right? So if you have a stock all day that's been red and under the VWAP, and you see it come up to the VWAP later in the day and kind of sizzle under and like kind of get ready and thrust through it, that's kind of my opinion, the bulls taking control and a short-term trend change. So that's what
Got
we
it.
saw here. This is a sizzle. We have the stock consolidating tight. Now, if it were to say like break up, you see this little wick came over the VWAP on this blue candle. I don't really want to be taking that. I want to be taking it when the 90 MA gets super tight to the VWAP, because that 90 MA can kind of act as like a launch pad in a way. You can see how the green line, this 90 MA, got nice and tight to the VWAP here, and that's when that big thrust came. So I'd taken this immediately on the VWAP break. We were sitting there on Zoom, and I was like, hey guys, as soon as this cracks, like we're in. And obviously, like we talked about PD before, look at the volume as soon as we came over the VWAP, right? This is a catalyst. I was like, hey, this thing can move the rest of the day. We got the volume confirmation. The trend is picked. It's up. Okay. Now, if that would have gone against me there and wicked down below the VWAP, I would have looked at 33.80 as my stop, because that was that hard support level that we were holding.
Yeah.
And then, so we got a nice move here. We were able to scale some out at these upper wicks, but we did show some weakness and pull back. Now, this is two setups in one, okay? So this is the VWAP sizzle, which is where it consolidates tight underneath the VWAP and thrusts through. And then this is also the VWAP bounce. So a VWAP bounce is a bullish trending stock that pulls back very orderly into the VWAP, holds it, consolidates for a few candles, and you see it get bought up and kind of form this little rounding pattern off the VWAP. We can see it came now right to it, and that's where the buyer stepped in, and it also aligned with the 20 EMA on the 2-minute and the 9 EMA and the 5-minute. We're all in confluence here. And if you look at this trend line, we kind of had almost a little bull flag set up here. It was a very orderly pullback. It wasn't a hard sell-off. So that's a good sign for us. We want to stay in this. If this would have knifed below these EMAs, I'm out at that point, right? I would have closed out under 33.80 here, but at this point, you know, if it fades below those EMAs, I don't want to be in this anymore. That's a long way to recover if we were to bounce off 33.80. So I did say, you know, if you guys missed this entry on Rivian, which was a tough entry because it was quick, you know, you can take this secondary setup here off. This is the VWAP bounce. And then, you know, we got the bounce and moved higher, and we just kept moving higher all day for a really, really nice trade.
Awesome. I love it.
And then, so that is the VWAP sizzle and the VWAP bounce. So that's two setups combined into one. And, you know, remember, every single one of these trades has an idea behind it, whether it's from the daily chart or the catalyst. Okay. Now, Google here is the opposite of the sizzle. So this is a VWAP fizzle. So we had this, you like that?
I do. Yeah.
Yeah, I like them too. So this candle here is market open. You know, we pushed hard at the open and started trending higher. And then you can see we kind of had this little sell-off, lost the 9 EMA and the 5-minute. And you can see we kind of consolidated here above the VWAP, where Rivian, you know, we consolidated tightly under it. Okay. So this was the bulls in control. Now, if we lose this VWAP, bears can take control of this. This isn't necessarily the best example of a VWAP fizzle because it didn't see a crazy amount of follow through, but this red candle shows the significance of the VWAP intraday. You can see Rivian, you see that massive candle through the VWAP, you see this massive candle here. So, you know, we had a few wicks below the VWAP, but then again, like I said with Rivian, I'm not really sure I want to take that because this 9 EMA is a little extended, right? Like if this red candle that knifed down were to break below the VWAP, I'm ideally not taking that because, you know, the EMAs are so far, like, is the juice worth the squeeze? Is the risk to reward there, right? The closer the EMAs are, the more of a move you can get. So we saw the 9 EMA get nice and tight. This candle here was kind of my confirmation. They tried to break it back over and it got sold off very quick. And then as soon as this one thrusted through, when this EMAs are crossing, all three of these indicators all in the same spot, like you hit that. And just to show the significance of that setup right there, you got, you know, a 0.6% move in one 5-minute candle. You know, that's gonna that'll print on options. That'll give you a really nice return. And then eventually, if you held, you know, never a reason to really get out, we never got back over the EMAs, you get about a 1% move to the downside there. And on this one, you know, if we had wicked down and we had got back over the EMAs, and, you know, I'd want to maybe see a break above this candle high just because of the wicks that we were seeing. I'd want to, you know, let that candle wait out. You kind of, the more you watch these and trade them, you get a feel for when you should stop out. You'll kind of know based off the price action. Once you've, you know, watched enough 5-minute candles, you'll kind of know when it's going to go against you. But when I take a VWAP sizzle, I ideally like to keep the risk nice and tight and a stop above the VWAP.
Got it. Awesome, man. Well, hey, okay. before you get into the next setup, if you're just joining us, we're hanging out with our good friend Bracco. He's going over his favorite day trading setups. Really happy to have him on. And he has brought with him a 45% discount on any TrendSpider plan of your choice. So if you are interested in a TrendSpider account, but you are not yet a user, please take advantage of this very limited offer. We've got about 30 minutes left on the show. So the coupon is available for another 30 minutes. If you'd like to take advantage of it, hit us up in the YouTube chat and we will get you that code. Back to you, my friend.
Okay, so our next setup is going to be, we saw Rivian was the example of the VWAP bounce. This one's going to be the VWAP rejection. Okay, so, and also I want to say for you guys that haven't used the VWAP before, I highly recommend you keep it on your charts. It stands for volume weighted average price. So it's basically, it resets every day at the open, and it's essentially the average price the stock is traded at throughout the day. Okay, so this is the VWAP rejection short trade. So Rivian was, you know, a bullish trending stock that pulls back to the VWAP and gets a nice bounce. You find some buyers there, and it's typically a good long setup with a stop below the VWAP. This is one of the greatest VWAP projection examples ever. And I remember me and TCR had missed it and we couldn't sleep for days because of it. I believe this was on CPI day, when we had gotten killed off CPI, major gap down. And I mean, let's just see, from the open, we dropped 2.6%. And I remember saying like, hey guys, like CPI days aren't the days to push it. In the past, they've tend to like kind of just chop it around and fade ends up winning later in the day. So I wasn't as focused up as I should have been, but this is such a beautiful example. So, you know, we get the opening range break lower at the open. We kind of broke down below this low here, this 483 spot. We broke down below it. You could have used the VWAP as your stop here if you played the ORB, but we ended up trending lower. I did not take any trades at the open on this day, I believe. I kind of think I just sat out. And then, so you kind of see these like higher lows getting put in as we move up towards the VWAP. And if you almost want to draw a trend line, you know, you might have a little bit of like a, you know, bear flag type thing here. You have this trend line that we held right here. I'll turn this black so you can see it better, drop the stroke. So you kind of have these like higher lows being put in as we approach the VWAP. And, you know, we get up to this VWAP and this candle kind of shows a little bit of weakness. So on the VWAP rejections, I like to enter on a break below that VWAP rejection candle low. So the low of this candle that rejected, I'll take my entry once we break down below that. So we came, bulls had their chance to bring it over the VWAP and change the trend. They failed, and bulls can use it, or bears can use this as another spot to just sell into throughout the rest of the day. So you take your entry there, and essentially you have your stop right over the VWAP. They wicks over the VWAP, you're out, right? Nice and tight risk, okay? Now, if you look at this, you see how tight your risk is there, right? You're risking from this candle right here to the VWAP. That's almost nothing, okay? And then look at this move we get off this rejection. You get a move from, if you take the low of this candle to the low of day, you get 1.8% in 2 hours. That is a monster move on SPY.
Sure is.
And you never really like look at this. You never even had like a, you know, once this starts moving in your favor and say we get down to like this area right around here, these lows, you can use the 20 MA on the 5-minute as your stop. Okay. If you miss that, you know, VWAP projections, you can look for little bear flags in the 90 MA. But just look at this. This is an absolute trender. You never even had a reason to have to think about stopping out. This was completely in your favor the whole time, all the way till low of day. So that's a VWAP projection. I think people, you know, I sometimes underestimate how you know strong these VWAP projections can be if we want to fade into the end of the day. You know, that's midday. That's the chance for the trend to change, right? That was the chance, and it didn't happen. And I wish I would have recognized this on this day, but that is just such a beautiful example. If you get over the 20 MA, that's where I would have stopped out. But it's, ideally, you're scaling out into weakness on these pushes lower.
Would the moving averages being below price have given you any pause in the moment? Make you question yourself just a little bit? You know, you would
like
presume,
right around here where our entry was.
Yeah, you would kind of presume maybe those moving averages are going to hold and price is going to bounce and gain, right?
That's a good point. Yeah. So you do want to keep an eye on that, right? You also want to keep in mind that, you know, the sentiment is incredibly bearish on the day, right? We got the high inflation print. The market didn't like it. You want to have that too. Right. So you got kind of the catalyst working in your favor. Right. You do keep those EMAs in mind, but the good thing is the way I like to play VWAP projections, you have a very tight risk. Yeah. So, you know, if we really zoom in here and get close on this candle, and if you take it on the break below the rejection candle up to the VWAP, you're essentially risking, you know, 50 cents. Right. For, you know, you're risking 50 cents there for, you know, your reward here is, I guess, at the end of it was $7.50 almost. So, you know, you want to keep those EMAs in mind for sure. But yeah, you have a very tight risk. You know, your stop is above the VWAP no matter what. You don't want to hold if this thing breaks above VWAP.
Usually, what I know you're trading options primarily. What, yep. What's your strike, or rather your expiry usually?
Okay, so Monday through Thursday, I will trade weekly contracts always. Okay. I will usually take, you know, 2 to 3 strikes out of the money. I never like going out more than 3, and I don't like taking the one that's right out of the money. I think 2 or 3 strikes out is my sweet spot. Okay. So for example, here, if I were to trade SPY, we're breaking the low at, you know, around 399. I probably would have taken the 388 or 377 puts. Oh, wow. But so or three, sorry, 397 puts, whatever, like $2 out of the money.
Okay, got it.
But one thing that I actually started about 2.5, 3 weeks ago was I quit zero DT trading. So I don't trade zero DT contracts anymore. I used to a lot, and I think, a lot of newer traders really like feeling that, 400, 300% rush. Sometimes I see Weeble cards with 1,000%, right? But I think that can really blind you because, you'll have so many losers on a zero DTE, like 10 losers scalping these things. They go against you so quick, but that one winner gives you that adrenaline rush. It's kind of almost like an addiction, right? So I
Sure.
kind of gave those up. And I think a lot of people like underestimate, options are about the speed of gain, right? You're leveraging your money to get higher returns quicker, right? It's not about the amount. You're not, people underestimate what 30% returns in 20 minutes is. Like, that's crazy, right?
Right.
So it's not about the amount. You're not going, just even take, on Fridays I trade next Friday contracts,
Got it.
so about a week out. And basically I just go with heavier sides, so I'll go 6% of my portfolio. That way, I'm just trading the chart. I don't have to trade the theta. Like, if you take zero DT like SPY options, like, you really have to time it almost perfectly. And you have to like trade the contracts, right? Because every minute, your contract's decaying.
Right.
So I like even on my small swing trading account, I take 2 weeks out minimum on every swing,
Okay.
because I want to trade the chart. I want to have to get out of the trade based off of a technical reason rather than my contracts going against me. If you don't have to, why would you want your contracts going against you? Let yourself trade the chart, right?
Yep.
That's what you're good at. Don't
Yep.
trade those contracts. So I gave up zero DT. And I mean, I'm not embarrassed to say it. I don't, it's helped me tremendously. I'd find myself sitting there all day, just like scalping zero DTs on SPY, like 10 of them. Like, it was just getting ridiculous. And one day I'll get, a little more discipline. And if I'm up on the day, I'll use some small size for fun to trade a zero DT. But I don't think they should be really, unless you're very, very experienced and disciplined, I don't think they should be used very often.
Got it. Cool.
Okay. Now, this next setup is going to be a trade that I took on Walmart. So this is a flat top break. This is a long side setup. This is a pretty basic setup that I think a lot of people like already trade. It's sort of a breakout setup. So this was when I took, this was on a Friday. We saw a gap down at market open that kind of got bought up with some strength. So I was like, okay, let's keep an eye on this later on, see if it sets up for something. And then I noticed later on at around 11 o'clock, like, hey, this thing keeps rejecting this 133 spot, but we're putting in higher lows, which is
Hmm.
something to keep an eye on. If this were to make a lower low, you don't really want to watch this anymore, but we're putting in higher lows as we get to this breakout spot. And I started watching it on this strong candle here. I said, let's see if this thing wants to hold the EMAs and let the EMAs get nice and tight. If this were to break on this candle, likely not taking it. Because like we said from the other setups, on almost all of these, I like the EMAs to be nice and tight to the breakout spot or the breakdown spot, right? It gives it more of a thrust. Your risk is smaller because, if you take this breakout, like, you want to be able to risk down to the EMAs, but that's a little bit of like ways away. Look how much closer the 9 to 20 EMA are to the breakout spot here. So the higher lows are very important on the flat top break, and the flat top break also works a lot better when it's high of day. You want it to be a high of day break. Okay. This was, around lunchtime, so this gave us some time to work with on the break. I had gotten in on this wick. I did get faked out at first. That was our first break over that 133.05 level. I said, okay, let's see if this thing holds the 20 MA, falls below it, and see some follow through. I'm out. Luckily, it got bought up, and we saw that thrust, 2 or 3 big candles, scale out some up here, and this thing just pretty much, you could have stopped out below the 20 MA. But when these come down to the 20 EMAs, sometimes they like to wick below. Obviously, they'll never be perfect. It would just be too easy. They got to stop some people out. But if you've already scaled some out on these moves higher and lowered your cost basis and taken some risk off the table, essentially here, you want to be down to third size or half size of your position. You want to, scale into strength on the first strong move and be able to take profit so you can let the trade play out.
Sure.
And then so this, I kind of watched it, gave it a second, and it got bought up, and we pushed to, another high of days. So this breakout was a 1.13% move on Walmart. This was a few weeks ago when I was trading zero DTE still. So this was a Friday zero DTE trade, which did go, couple 100%, but don't want to brag about that. But anyways, but yeah, so I would have used the 20 EMA. The 90 EMA and the 20 EMA are used to guide all of my trades. I like to use those for stops always. I like to watch how the, I like to watch real close how the buyers and sellers react when these come down to the EMAs. This thing just kept getting bought up off the 9 for so long. I said, hey, likely they might buy this up, try to get it cheaper on the 20 and push it higher here on anyone trying to get short, just like kind of shove it in their face. You see those 4 candles kind of just like explode on this thing. So
Yeah,
that's the flat top break. You want to see those higher lows. You want the EMAs nice and tight, and then you get that nice thrust through. And on these trades, you can't hesitate. You just got to trust your gut, know your setups. These strategies only work. A strategy only works if you're disciplined to it, right? If you
for
follow it.
sure.
You can't lose on 3 of them and not take the next one, because that next one will make up for all 3 of them plus more,
Right.
right?
Right.
So if it's a system and you trust it, you follow it.
Yep.
So this last one is going to be the opposite of the flat top break. This is a flat bottom break. Okay. This is on Tesla. And like I said, the flat top break works better at high of day, and the flat bottom break works better near low of day. Okay. I didn't really count this as low of day because this was like the opening candle on the 5-minute, but I watched and I saw this pullback level right around this. I marked out kind of a zone based off this candle, like a demand zone sort of for now. And I said, okay, we pulled back to this 90 EMA, moved higher. I marked out that level here and I said, hey, let's watch it near the end of the day. If this thing can't break these highs, ended up, a big theme lately in the past like 3 or 4 weeks in the market, not the past few days as much, but the last few weeks we've been seeing a very common theme of like a run up in the morning, and then like around 11 or 11:30 we get this really hard fade. You see that right here around 12 o'clock. It was a theme for so long, and we kept getting these like distribution tops, and we'd come down, break below the EMAs, and kind of consolidate and bear flag out before we broke down, and we get these hard fades. And we were seeing it, like I remember we got it 3 days in a row one time. I was like, let's pay attention to like 11:30, 12 o'clock. We don't usually trade much at that time, but let's focus up because this is like a reoccurring theme. So this was one of those trades, where it's based off a pattern we've been noticing. And then so we came back down to this 284.50 area, kind of held it. You're not falling for that wick below it there because the EMAs are way too far away. The risk to reward is not in your favor. And then you see, we kind of consolidate sideways and get these smaller, tighter candles. As the 90, I don't like to take trades based off like EMA crosses. I know some people do, but I use it as like a signal. Like you could say, hey, the trend might be changing a little bit here. You got the shorter term moving average falling below the longer term. And then we get these EMAs to cross the downside on this candle. So that's noted. We're getting close to this breakdown spot. We have the pattern and the theme of this midday fade in our favor. And then you see the 90 EMA gets nice and tight and starts pushing and shoving towards this breakdown spot and almost like traps the price action and gives it nowhere to go but down. Looking at this, we got a push up the high day. We failed to break these highs here. The path of least resistance is down, right? So, I remember this candle too, intraday. This was a hard thrust and it kind of consolidated at the bottom here before falling lower. But you'll see these candles, how they act so much differently than like these ones that just kind of like fake out a little bit. You'll know it in your mind, like, oh, this is like sellers are coming in hard. And then, essentially you'd place your stop above the 9 EMA on this on the 5-minute. We got an awesome move down on this. I took it like in the middle of this candle. I got a 2% move in 30 minutes, literally just straight down. That's an incredible move. And then it kind of consolidates, and I probably stop out around here when we start getting over this 9 EMA.
Got it. Interesting,
So
man.
remember that. I just want to make that clear that the flat top break works better at high of day, and the flat bottom break you want to be taking near the low of day, right? I didn't count this opening candle, but this level was clearly something when you saw these candles holding it here. So that was something to watch for sure.
Yeah, awesome. This is really cool to get to like dig in and see how you're really thinking about these things. I love how you're using the moving averages and letting everything tighten up really nicely and not getting tricked by that initial candle, like you mentioned.
Yep.
I guess it was like 11:25 or so.
Yep, the tighter the EMAs are to the breakdown or breakout spot is always better. That helps give you more conviction. It's very rare that these EMAs cross the 9 EMA, shoves this price down, and this thing just rips in your face, right? Very, very rare. But you have a nice defined stop. Basically, if this were to wick back up and get over the 20 EMA, I'm out right there. So over that purple line, I'm out. But try these EMAs on your chart if you don't yet. Kind of watch how the price reacts with it. even some stocks will react with the EMAs differently than others. And that's why I
Right.
suggest using certain stocks, and like even if you have a small account, pick a couple stocks that have cheap options like Apple or Ford, and like just watch all three of those for a few weeks and kind of get familiar with the price action, and you'll notice like very small patterns. And the one thing I've noticed with Tesla lately is how strong these opening range breaks are at the open, and that's what I've been taking advantage of here. You saw this ORB, and I always have been selling too early on them. So I got to remember that when this thing picks a direction, it's got a high ATR. You know, we got the Twitter and Tesla news going on right now, so that's given more of an effect on these sell days. And yeah, and the main number one most important thing is make sure these trade setups come from like, you know, a broader idea. Like Rivian came from a catalyst, and PDD came from a breakout spot, and Tesla, a daily chart breakdown. It helps add more conviction to these trades. And you can't trust everyone has that gut feeling where like, oh, I think I should enter right now, but like I'm nervous. They get like gun shy, right? Where it's time to pull a trigger and they just can't, and it ends up working out.
Yeah.
You can only trust your intuition if you're putting in the work. That's what, TSDR told me when I first started trading with him. He said the only way you'll be able to trust that gut feeling is if you're putting in the work at night and reviewing the charts and you're aware of everything, right? This is a lot harder of a trade to take if you didn't prep at night. You didn't know that Tesla was breaking down on the daily chart. It's a very hard trade to take. It's not easy to get up in the morning and just trade setups. You'll take a breakout on PDD and it stuffs in your face and you're like, why did that just go against me? But you didn't realize that we're coming into a major resistance on the daily chart.
Right.
Right. So I think the most important thing you can possibly do for your trading is to prep at night and have a plan going in the next day, whether it's a long and short plan. I like to plan for both because frankly, I don't know where the market's going to go. So I like to prepare for any scenario. And yeah, that's probably the best tips I can give there.
Right on, Bracco. Well, this is the 10-minute warning. We've got about 10, 13 minutes left of the show. If you're interested in that 45% discount, this is your last chance to take advantage of it. So hit us up in the YouTube chat if you are interested in taking advantage of it. And let's hit some questions. We had a couple of questions from Twitter. The first one was best technical indicators to use. That's a big question.
So let's just head to the daily chart real quick. You saw that on my daily chart or on my 5-minute chart and the 2-minute, I went over. I like the 9 EMA, the 20 EMA, and the VWAP. I also like the 9 and the 20 EMA on the daily charts. On every time frame, I use those same 2 EMAs.
Okay.
This is Tesla for an example. You'll see for my posts, I use the cloud sometimes on my TrendSpider posts on Twitter. It's essentially just takes the area between the 9 and the 20 EMA and fills it with a cloud. So you can see the bottom of this blue cloud here would be the 20, the top of it would be the 9. So we came back and you can use the cloud to kind of, an area of support if it's blue and an area of resistance if it's red. You can see right here, we broke down and then we ended up just bear flagging out right into the flag on the daily chart. And then there's your breakdown. And that was the day that I took that ORB down example that I showed you. That was the bear flag break right into the resistance cloud. I don't use the cloud intraday or anything. I kind of just put it on my charts because, it's aesthetically pleasing. And so I'll use the 9 and the 20 EMA. And then obviously, you all know me for the volume profile. It's like my favorite indicator. I think it kind of just helps, draw out areas of supply and demand for you. Basically, volume by price just shows you the amount of volume at certain price levels, rather to the down here is the volume per day. This is at certain price levels. So you can see dating back to these lows in May, majority of the volume was here in this zone. So it can kind of give you an idea where the stock can fall fast. It's actually incredible how this worked. You see here, when there's smaller bars, right, that's a low volume area. It's less liquid. The stock can fall a lot faster on lower volume. And I actually had this setup I posted on Tesla. I said, hey, watch this daily trend line. We break through it. We got some thin air below. We could fall pretty quick. And of course, somehow, it always happens. The chart preceded the news. We got the breakdown, and then we got that crazy news on Tesla, and this thing gapped down like 12%, right through the gap. I'm sure if we had a lot of volume there and we were coming in demand zone, that drop may not have been as big, but it was able to be that large because of that gap. So I like to use volume by price to get certain, ideas of where the supply and demand is, where the buyers and the sellers are, and then the 9 to 20 EMA and volume. And that is it. I don't like to overcomplicate it. I keep it simple. I've been working with those for months now.
Yeah, awesome. Right on. Next question is, do you use any scanners?
I do not use scanners, actually. I've gotten this question a lot. I don't use any scanners. I actually have the watch list here if you want to take a look at it. This is like my I have my daily traders. That was a list, but stocks list. This pretty much has like 80, 90, 100 stocks on it, alphabetical order. I'll hop on the daily chart with all of my indicators on, and I'll kind of just go like this and just rip through them and look for nice daily setups all night. That's all I do. I
Got
don't
it.
use scanners. I just stick with the names that I'm familiar with trading. Names that I've traded before. I don't really like trading new tickers. Maybe something will come up, but I like to stick to that. I recommend getting a good solid list of stocks you like trading. They're liquid. They have good options contracts, good range. They respect levels well. Get familiar with those levels and just look through those same ones every night. And I guarantee one of them will have a setup for the next day.
Right on. Are you using limit orders for entries and exits, or are you using market orders?
So I'm on Webull right now, and I use limit orders to get in, but I am switching to Thinkorswim this week. My money had just settled.
Okay.
I did talk about how I want to become like a trader at the open on these opening range breaks. And Webull has like a 3-step process to even get a trade in. And the market order fills aren't very good on Webull. It
Right.
is commission free, so that makes sense, right? Thinkorswim does have commissions and fees, but you get those really solid market orders. And I want to be able to kind of just have the options. Say I'll have okay, Tesla gap down this morning. I'm going to have the 280 puts loaded up right in the corner of my screen. It's all set up with the amount I want. So right as that breaks, I can get in market ordered on 3 contracts, 4 contracts at the click of my mouse, like
Right.
immediately. And I think fees and commissions can get you if you over trade a lot. But frankly, I've gotten very good at that. I trade max like 3 or 4 trades a day. So, I think that's going to be a really good change. But yeah, I think market orders and good fills are very important if you're going to be trading this style. If you're more of a swing trader, Webull's fine. Robinhood's fine, in my opinion, for swing trading. But if you're trading these quick entries, sometimes at Webull, I take these opening range breaks, I don't even get filled. And I'm like, oh my God, I just missed my fill. That's not going to happen on, Thinkorswim or whatever other platform you want to use that has good market orders.
Got it. Got it. And what specifically are you looking for when I'm kind of going back to your watch list and how you're kind of scanning through what specific things are you looking for when you're doing that, going through 100 names? Like what will catch your eye?
I'll give you one. So this is one that I'm actually swinging long currently. This is PayPal. I took a long swing on this one. If we want to use like a day trade example, I can use that PDD trade that I took. Um, we kind of, we were in a little bit of a bearish trend here on the daily. We were wicking up at these EMAs, and the 63 spot was always a big spot. I remembered it. The 63 spot was big. I really like inside days. I like inside days a lot. I think, the traditional way to trade inside day is to take the break over the higher low of the inside candle. So inside day is just a candle that doesn't break the higher low of the previous day. So you would take the break over this high of this red candle, got a nice little move there. But I noticed on the daily chart, we're getting these wicks above these EMAs that are pretty much flatlined next to each other. But we're also getting these higher lows. Now, really, if you think about it, this could be like a bear flag, right, on the daily. But I said, hey, the general market looks like it might want to move higher. This is an inside bar, close right below the EMAs. The 63 spot's a major pivot. We got an inside day. We're making higher lows. If this thrusts through these the next day, we could get a massive move up. You can just kind of see that that rounded bottom form down here up to these EMAs, and the EMAs started pointing up. And then we got the gap up over 63 that day. I don't want to chase. I waited for an opening range break to form, and I took the break over that opening range. So that's kind of what I look for. I took a swing on PayPal. What I look for there. I like to look for just I like to look for inside bars. I like to use volume by price and look at stocks that are approaching thin volume areas. Does that make sense? Like a stock that will likely fall into a gap and have some range. I'll mark those levels out and be like, hey, this is approaching. A good example of that, if this will load here, was EMPH today. EMPH had a massive breakdown today, right
Yep.
into this volume gap. And if you turn volume by price on, you'll see it. We had a massive 2-day move up from 220 to 270. And I said, hey guys, I totally missed it, but I was talking about it on Twitter. I said, when this thing cracks 270, it's over. This thing will melt. And then we had a monster trend day today. I totally missed it, but just look at that. This thing there wasn't really even an entry given at the open if you weren't swinging
No.
this, but 13% without even touching the 90 MA, which just
Right.
shows the power of that volume gap, especially on a bullish sector that you see kind of starting to show weakness. And then this profit taking is going to be very quick. They got to sell their winners too, and they're going to be rushed to take on those profits. I mean, just look at the sell volume today, right? It's
It's
crazy.
crazy.
That's what
Yep.
I'll look for on the daily chart. This one I missed because it was all the way up here. I did not expect it. TSDR had a great quote today. He said some of the biggest breakdowns come from failed breakouts, which was that
Right.
right there. This one, everyone was eyeing short in the solars. Everybody was. All the comments, yeah, I'm trying to get short solar. They're not going to give it to you when it's sitting right at this level. They're not going to make it easy, right? That was so quick and fast out of nowhere. They
Yep.
definitely made that one tricky. I missed that one for sure. But that's what I look for: volume gaps, inside bars, stuff like that.
Got it. Are you putting bigger daily, weekly, whatever levels on your chart when you're trading intraday so that you kind of know where they are, or are you just keeping it in the back of your mind?
Absolutely. I actually like kind of just mostly keep my levels all the time on my charts. I cleared them up for now for these examples, but when I'm marking levels intraday, sometimes I'll come back to like SPY and I'm like, why do I have this level marked out? And it ends up bouncing off and I'm like, wait, that's why I kept it there because those levels can still have some major, significance. But usually I like to keep daily and weekly levels marked out. For example, 270 on the EMPH up here. I'll keep this level marked out at like this 309, 310 area. But yeah, just like broader, more major levels, not much on the smaller time frame. But I'll mark out levels intraday for sure throughout the day.
Got it. What about after hours? I know I've noticed that I don't see any after hours data on your chart at all. Do you care what's going on after hours
So
or?
I between 4 o'clock and 9:30, I don't really care what happens at all. I turn off all of my after hours. I kind of block out that noise. If there's a gap up or down, I know how to trade it. I got my opening range breaks, my setups. But yeah, really don't look at after hours that much at all.
Got it. Right on, man. Well, we had a lot of questions come in and quite a few of them you have answered kind of throughout this. So to anybody who asked a question that we didn't answer during this section, please take the time to go back and watch because everything that was asked that I've seen here definitely was addressed. So I guess we'll close it out, Bracco, man. This was really, really great. I really appreciate you coming on and kind of like talking us through your whole process. Where can everybody who's tuned in, where can they find you during the day? If people want to maybe contact you and get a little bit better understanding of how you trade and that sort of stuff.
Yeah, so you can, of course, I'm sure most of you follow me already, but on Twitter, I'm Braxy, Braczzyy on Twitter. And you can DM me anytime. I try to get back to all my DMs. I get a fair amount of them, but I usually, at the end of each trading day, I'll sit there and answer all the DMs I got throughout that day. But yeah, if you want to find me, the link's in my bio. I'm in the Stock Talk Insiders Discord. I'm an admin there. Me and my mentor, TSDR Trading. We trade live on Zoom every day. We get on around 9 a.m. for a 30-minute market prep to go over our ideas from the first night, see where they gapped, mark out some levels. We have our plan from the daily charts from the watch list the night before. We kind of like tweak the plan in the morning and make sure, see what's looking good from our list, see what's not. And then we live trade from 9:30 a.m. to 4 p.m. We alert all our trades live on Zoom. I share my screen. He shares his screen. You can choose between the two. Right here, I'll be like, I grabbed 280 puts on Tesla for 350. I'm calling out all my entries, all my exits, guiding through the trade live. And then we tend to, when the market gets slow midday, we'll review our trades from the morning because a lot of our trades are in the first hour of the day. And then at night, we hop on at around usually 8 o'clock p.m. Eastern time. We'll hop on for an hour, hour and a half and scroll through all our stocks and go through get a watch list together. We do that on Zoom too. And all the members, throw out their ideas. We go over their ideas. Sometimes they find some pretty sweet setups that I wouldn't have found myself. But yeah, you can find me there. It's $20 a month. It's a big mentorship thing. We're super active with we get about 200 listeners a day on the Zoom. If you can't make the Zoom, we do type out alerts. So you can follow the typed out alerts. It's a little harder in the morning to type out these quick trades. It's very hard to get in, watch the chart, and type it out all at the same time. So I don't want, people chasing when I'm, at the bottom of this candle is probably by the time I could type it out and I'm up 15% already on the option.
Right.
So I don't want you guys buying while I'm scaling out my first 1/3, right? But if I get in and I'm down on it, but the idea is still there, like on PDD, that is something that I will alert and type it out. We also have swing trading challenges. TSCR started one about 5 months back, a $500 swing account challenge. They're all planned entries. He talks about them. Everyone can usually get in around the same price. They're very simple swings. He's taken that from 500 to almost 5,000 now. It's been
Nice.
incredible to watch. And I decided I wanted to do one too, so I'm trying to catch up to him. But I've gone from 500 to 1,200 so far. We hit today off our PayPal. We're up about 20% on that. So if you can't day trade, you don't like to day trade, we do have swing trades too. We have small caps traders in there, SPACs, pretty much everything. We have, we're just like, all around team.
Awesome, man. Well, again, Bracco, thank you so much for joining us tonight. This has been great. And look forward to maybe doing this with you again down the road.
Oh, anytime. I'd be happy to come on. Absolutely.
Awesome. Thank you so much for being here. Thank you for tuning in. We do really appreciate it. We hope you have a great rest of your evening, and we will see you soon.
Yep. Thank you all guys for tuning in. I really appreciate it. And yeah, I was happy to do this. Thank you guys for having me on.
All right, man. Have a good one.
You too.